Hello friends. Welcome to Current Affairs Review. Topic for today's video is falling rupee, a cause of concern. The recent all-time low of rupee per dollar exchange value has caused a worry on the economic conditions, and it is causing serious repercussions as well. But before understanding this, we need to know what is currency exchange rate. In simple terms, it is the amount of currency one country shells for buying 1 unit of foreign country's currency. At present, rupee exchange rate with respect to dollar is 80, which implies that we need to spend 80 rupees in exchange for $1 US. Well, there are different types of exchange rate. Firstly, fixed exchange rate. In this system, exchange rates are fixed, regardless of external factors. And if the exchange rate crosses the band, the government, through its apex bank, intervenes to restore the exchange rate back to the preset value. Secondly, flexible exchange rate system. Under this system, governments do not interfere in setting the exchange rate. Rather, exchange rate is left to be decided purely by the market forces. Lastly, managed float exchange rate. It's a hybrid between fixed exchange rate and the floating exchange rate, but usually the exchange rate is decided by market forces, and if the rate deviates alarmingly from the expected value, then the government intervenes to restore the normalcy. The primary contributors for this plunge are: as Russia invaded Ukraine earlier this year, it has sent ripples across the economic map of the world, as well as India, which has been witnessing outflow of dollars from the Indian market. Reserve Bank of India is taking several measures to attract inflow of foreign currency, but American bond yields provide more rate of returns currently. Eventually, investors dissuaded to invest in India at the cost of losing more returns from investing in America. Widening current account deficit would automatically weaken rupee against foreign currencies, as outflow of rupee far outweighs the inflow of foreign currencies, especially the dollar. The dollar index, which tracks the dollar currency against a basket of major currencies, has increased by over 9% this year, which eventually attracts global investors to invest in USA. A country with higher inflation would have lesser demand for its products abroad, and lower demand would dampen exports and thereby reduces dollar inflow into the country. Meanwhile, USA has increased the interest rates, which eventually led to investments in USA that yield richer dividends than elsewhere. One of the biggest downsides of depreciating rupee is the spike in inflation, as now Indians have to shell a greater number of rupees for the same products. These results in inflation. Due to the surge in import bill, the current account deficit is poised to bloat further, where India presently has already widened its trade gap to a record high of $26.18 billion in June, which eventually deplete our forex reserves in the absence of additional net dollar inflow. The weakening rupee against dollar and the subsequent repercussions force the FPI investors to withdraw their investments from Indian markets and channelize them to safe havens like USA. Also, tourists have to pay more for visiting dollar-based countries, and education in those countries gets more expensive. India has to pay back more amount than what was estimated before, due to the falling rupee. Lastly, inflation would force RBI to increase the rates to absorb some amount of money from the market to contain the inflation, which eventually make the banks to charge high interest rates on loans. As dollar fetches more rupees, local traders would be tending to export their goods rather than selling domestically, which would earn us valuable forex. As dollar would fetch a greater number of rupees, a tourist trip to India would become inexpensive for the foreigners. A weakened rupee would prompt NRIs to remit more dollars back to India, as dollar would fetch more rupees than earlier. Import substitutable products get an added fillip due to increased cost of imports. As India, one of the pharma and IT hubs, which form significant share of India's exports, would be in a position to bag huge profits as well. Download material for this issue from our website. Please like and share this video. Please subscribe our channel and hit the bell icon to stay updated. Thank you.